for an enriching keynote on India's shining success in digital public infrastructure by Dr. Pramod Varma, co-creator of Aadhaar, UPI, and several other core digital public infrastructure platforms. Dr. Varma leads Networks for Humanity and is the CTO of EkStep Foundation, building open, privacy-aware, and scalable tech for inclusion. His work empowers over 1 billion people and continues to shape India's global digital leadership. Ladies and gentlemen, put your hands together as we invite Dr. Pramod Varma on stage.
Good morning. Okay, good morning, everyone. I don't know whether we have a special set of seats here. I was surprised, yeah. But this is a very interesting setup, so I have to maybe look at both sides to see it. Lovely to be here. By the way, I'm not your alumni. And I don't have an IIM degree. But I was asked to talk about India's digital public infrastructure transformation, and it's been phenomenal. But much of that you have heard about it. So I'll talk about very little of that, and I talk about what's brewing. I think that's very important to understand what's happening and what will happen in 5, 10 years. And many of you are entrepreneurs and market players, and you ought to be watching these trends very well. I also have a fireside chat with Rahul, which is what I'm excited about. So I'm going to take literally 10 minutes, okay? Just stay with me. I know it's after breakfast, first thing in the morning. I'm going to go really fast, but 10 minutes. And I'll hopefully compress a lot of stories into that 10 minutes, okay? So this was how 10 years ago India was. India was very, very behind. And biggest challenge for us was formalization. Formalization of 1 billion people. You know, they didn't have identity, they didn't have bank account, they couldn't access capital market, 2%, 22 million people, for a variety of reasons why it couldn't grow. And of course, India is also a subsidy regime, so we give a lot of subsidies, a lot of leakages in the subsidy, a slew of problems. By the way, we have not solved many of the problems. India is a land of problems, but some of these we managed to solve really well. And that's, I think, because we applied the lever of technology to actually transform using the marketplace. And that's something which is very, very important for us to learn. And this is what we saw. We saw a significant shift, what we call a non-linear or exponential shift in the last decade, which no other country witnessed, no other country, except in bits and pieces like Brazil in PIX and Thailand in prompt pay and so on. Even developed economies, as you know, they were very behind on that digital. And the first one was mass formalization. That means we took 1 billion people, gave them an ID, today 1.4 billion Aadhaar numbers, 70 million times used every day. And of course, we opened 625 million plus bank accounts to new bank accounts, by the way, and taking from almost no one having banking to universal access to banking. And of course, we continue to grow, and this growth was studied by world over, by the World Bank or Bureau of International Settlements in Switzerland, studying how India compressed 5 decades, potentially 5 decades of development into 1 decade, less than a decade. And this is extremely impressive because if you wait for 5 years, we would be in 2060 trying to still open bank account. And on one side, you guys are talking about AGI and everything else, right? Remember, this disconnect between a mass part of the society being behind the scene is a very important part of it. And otherwise, you have a significant uprise in the making if you don't bring them along. And the same thing happened in frictionless payments. And, we started designing UPI in 2013, literally, in Bangalore, 3 of us. And 2014, we completed the design. 2015, we piloted. 2016, we launched. And today, we do 15 billion API calls, 650 million transactions a day. Largest, bigger than MasterCard, bigger than all, really, really, really deep penetration. And the best part about the payment, frictionless pay, if you can't move money, and if you can't move money freely, as easy as a WhatsApp message, economy cannot progress. And that's what we saw. And so we had to sachetize to make sure a 1 rupee, 2 rupee, 5 rupee transaction can happen. Now, did bankers really like it? Questionable. But nevertheless, well, there's a larger purpose for this to move, because without it, formalization won't happen. Now, a kirana shop or a small shop also has a flow of money in a verifiable manner. That means their digital footprints are getting verifiable. And that created the next movement for us, what's called data sharing, a trusted ability to verify what you claim. If you're a business person claiming that I have 20,000 rupee revenue every month, or if you're an employee claiming you earn so much, traditionally there is no way these claims can be verified. And India set out to do this from DigiLocker in 2014, September. We wrote the first DigiLocker vision paper. 2015, July, we launched it. Today, we have 9 billion credentials in DigiLocker, 550 million users, plus account aggregator now extending that idea, and personal healthcare records and so on, extending that idea to provide not only your credentials, certificates and documents, but also your transaction trail. Your transaction trail as a verifiable data in your hands. And this has a significant implication on you. Because as a fintech, and I already spoke to a few of you, as a fintech or a health tech, your ability to create programmable workflows at a low cost, high fidelity comes from the fact that the underlying artifacts, identity, documents, data, is actually verifiable and not through scanned documents, paperwork and scanned document, because that creates high cost. And we also actually digitized businesses. Now, some of them forced GST like shift. It was a big shift at one shot, because the country had to make that move in 1 July, right? Literally, we had to say we are GST live. So it was, all of you would have faced the brunt of it, maybe still facing the brunt of it. But nevertheless, one of the best second-order effect GST did is that every invoice, a billion-plus invoice in India, is actually machine-readable and cryptographically verifiable. That's awesome for Bangaloreans, okay? Really, okay? And now you can actually imagine the possibilities that actually creates your ability as a provider. If you're a business person, if you're a lender, your ability to actually underwrite things at a scale and speed, a velocity that you have not ever seen. And that creates possibilities like this. Our ability to actually do sachetized lending, because our lending to GDP ratio continues to be horrendous. SMEs can't get lending. It's easy to get 10,000 crores, but not 10,000 rupees, because it's just the cost of provisioning, cost of trust, cost of verification, cost of onboarding, cost of collection, cost of transaction, of course, cost of compliance. India continue to have compliance cholesterol. I mean, it's very tough, right? In the sense we have all of you probably are living every day as businessmen. Amount of regulatory and compliance that we have to deal with. How do we make it easier? It's very key. Otherwise, businesses won't thrive. Innovation can't flourish if these costs are very high. Oh, they'll flourish for the top 10% of the country or 20%. It'll never, ever be affordable for the rest of the 80. And that is the thing, really underlying technological backbones allow low cost, high volume, high velocity flow to happen. And that is very, very powerful. But that's where we were. When we were doing COVID, we formalized billion people, ID, payments, bank accounts, data. But we were looking at the markets, and we are saying, how is there a market, enormous markets, really large markets, so fragmented and inefficient, high cost, low trust, low equilibrium? How are we living at that? And we saw that with, you'll think, oh, Uber did pretty much our mobility. No, Delhi Metro alone does more transactions than Uber whole of country. So India's mobility, urban mobility, if you put buses and metros and auto rickshaws and everything else, is so large that we are not even sliver of it, not even digitized, right? Same thing with EV, energy sector. Same thing with logistics sector. Same thing with B2C. Even with Amazon, you all love it. Large companies, large automation. We are less than 10% of B2C is digital. 90% of B2C is actually physical. Now, that creates a very, very low-performing equilibrium for the system because information asymmetry, access asymmetry, high cost, low trust. And that's not a good place to be in as a market, right? So this is one of the things that we have seen is that the traditional platform play, as we saw in the West, is not working for extremely large countries like India with extreme diversity. Same reason, the African continent, if you look at it, India is like a continent, right? We are not really one country by constitution and a border we just drew. Other than that, we are very different inside. So Africa is similar. So what happens with that extreme diversity and scale is that you tend to, the traditional Western platform-centric model don't seem to work at all for us. And that's where we were reimagining possibility of how can we create an internet of commerce, internet-like approach. Internet is not central, not one box called internet. It is powered through protocols, standards, and a highly decentralized, a network of network, but coherently and cohesively we have a beautiful internet connecting the whole of humanity. And that's really powerful. How can we imagine a commerce network, a transaction network that way? And that's where we started. And we started 2 years ago. ONDC, by the way, crossed 250 million transactions, by the way, already. If you think this is like UPI in 2016, a lot of people said, yeah, but Paytm already did what UPI did, so what's interesting? Wait for it. People, you are impatient. Wait for it. We have not even seen the combinatorial innovation this is going to bring. The programmability of commerce, programmability of supply chain is coming. It's coming thick and fast. And you have to really wake up and smell the coffee. Okay, what's happening? And actually start playing your entrepreneurial hat and to say, how can I take advantage of this massively programmable infrastructure available? Like when internet was coming, 96, if you were thrown into that, what would you have thought about it? What can I do? Whoa, a full programmable infrastructure called internet is coming. What can I do? Same question you ought to be asking right now, okay, with internet. And that's what these companies are asking. These number of companies who are starting to program an ONDC, and this is powered through a protocol called Beacon Protocol, with Nandan and I had started as a foundation 5 years ago, open source protocol, by the way, global protocol. India is adopting that because India is a beautiful playing game, and we live here, our heart is here. So we tend to do these playgrounds in India a lot of times faster than other places. But we have many other efforts. And India is showing a unique model of growth, very interesting. Very, very different from what US is doing or what Europe is doing, is a combination of policy and regulation. Because without regulation, it won't happen. That's what SEBI did in 2016. 2016, we already had UPI. We already had e-sign. We already had DigiLocker. We already had Aadhaar eKYC. But capital market was 22 million people. SEBI said, let me create a regulatory push. To do what? To allow purely paperless, presence-less, cashless mechanism to actually come into the market for people to come in. And Zerodha went from 70,000 customers to 7 million customers in 1 year because of that. One regulatory intervention. And Nitin talks about it all the time, right? Nitin probably says, regulators have to make way for entrepreneurs to be able to actually create this. If every paperwork and KYC and coming home and scanning and keeping, I can only go after so many customers. Tough luck. It's not economically viable to go after Uber driver who wants to put 100 rupees into a SIP investment. But today you can. And we showed this 2 weeks ago to Vanguard CEO. Vanguard, after BlackRock, second biggest player in the market, they fell off the floor. Completely 30 seconds. We showed how KYC can be done, mutual fund account can be opened, a UPI mandate can be set up to SIP investment for 250 rupees a month, right? 30 seconds. Fully programmable. Amazing ability Now that allows to deepen the market. And that is the reason today, absolutely, India managed to get domestic SIP investment to cross FIIs. That means FIIs in bad mood, good mood, affects us less now anymore. That means economic resilience coming from domestic investability. Lendability, investability, spendability, very important for us to be resilient, especially with this tariff game and everything else going on. God knows, we better bloody well be independent somehow, right? It's very, very important for us to do. You never know when he wakes up in which part of the bed. And digital infrastructure is a very key part of that policy. SEBI could not have done what SEBI did in 2016 if UPI, e-sign, DigiLocker, Aadhaar didn't exist. They could have put out a thing, oh, we must increase capital market, we must increase capital market. What the hell are you supposed to do as an entrepreneur? The cost is just crazy, and I can only go after rich people. Tough luck. I'm okay, right? It's only so much you can do. Unless you're SBI, then you're whipped into creating few more free accounts, but that's about it. Hence come the third part. India's success has been a beautiful jugalbandi of public rails and private innovation, driven by all of you, driven by the market players who looked at the new opportunities that arise to actually go after the next 100 million, next 200 million, next 300 million customers, eventually to get to it. Sachetized, right? Bottom of the Prahlad's famous bottom of the pyramid question. And that's where we see our markets really, really growing. And what we learned is this: shared infra increases velocity. Very, very powerful. And reuse generates exponentiality. Lego blocks argument. If you have Lego blocks, ability to compose is exponentiality. Just no more linear. And interoperability induces competition. Very, very powerful anti-competitive measure is also interoperability. Some of you may not like it. That's okay, because you want to build your own moat. But nevertheless, as a country, we want it to happen. But what we learned is that, unfortunately, what India did cannot be repeated that easily in other parts of the world, because if you go one sector, one highway, digital highway at a time, all of us would have dead and gone. Nothing will happen in the world. 190 countries, right? It's very, very hard. So we were asking ourselves, we, Nandan and us, and some of us, we have nothing else to do. So we are asking this question, what do we do with the rest of the world? And people might say, why are you worried about the rest of the world? Because we have, again, nothing else to do. So I think we could think about, we can think about 1 billion people, we can think about 8 billion people. You have the same 24 hours a day, so it's okay. So I think it is important. And this is also a learning for Indian entrepreneurs. We tend to be overly Indian for no reason to be Indian. We can start here, but how do you do this? Think global. When Facebook was launched, they didn't launch it for US first and then Europe second and all. They build it for the world and launch it, obviously calibrate your actions. But ambition doesn't have to be calibrated. Action can be calibrated, right? It's very, very important. First one we are doing globally is converting every flow of trust, because cost of trust or verification of academic certificates, proof of income, proof of documents, proof of employment, people who go across the border, proof of trade, proof of customs, every one of them we are doing what's called credentializing. That means cryptographic protection and ability to verify these documents. Suddenly creates high trust, low cost flow of trust. And that's fluidity of that trust is very key. And the second one, we had all the QR codes you can scan, or maybe I'll just share this deck later, is Finternet. There is a massive vision that is brewing, global vision. We published this paper in 2014 in Washington. It's a co-created with the rest of the world to tokenize every form of asset beyond credentialization. Tokenization is a way to make every credential transactable. Okay, this is very tricky. So it's like money. How do you convert from a paper to actually transactable instrument, like an invoice? How do you convert it? We'll talk a little bit maybe with chat. Okay, you go and read. Okay, if you're interested. This is 2 years into it. We have a large ecosystem, and we have large market players joining in. Very big ones to small ones joining in worldwide. And again, Indian, sometimes we have our own partners here slowly. And this is something which ought to track. This will create across sectors ability to program, programmable programmable commerce or programmable trade and programmable financial transactions will happen. And then we are also doing what's called the Internet of Value, which is the backend protocol we saw in ONDC playing out. We saw our Namayatri playing out. And today, one of the biggest issues that when we did Namayatri, we'll talk more when Rahul and I chat, is also every one of these efforts we are doing, including backend when we did, is the question of accessibility. Because again, we have to worry about that part because it's not a small number. India has 150 million, and the Purple Economy team is here. You are partnered with them. I congratulate you to partner with them. They have a stall outside. You should go and definitely check it out. The ability to be conscious in design. When you design, either physical or digital, you have to be very conscious about the fact that India has 10% of Indians at least, that's what I heard, are disabled in variety of forms. And beyond that is temporary disability. You could be, or I could be, hit by a car and be temporarily disabled. Then we realize how hard it is to actually survive, okay? Suddenly. Until then, we are all, extremely blessed and privileged, and so we take it for granted. It is very, very important that you design, including market apps, whether it's PhonePe or Zerodha's world. Please be very cognizant and conscious about every one of these protocols are designed to be inclusive and accessible. But protocols are not enough. Apps have to be. Physical environments have to be. So we have to continue to push that boundary. Okay, it's very, very key. And these are actually happening all global. I'll stop there. All global, nothing now India specific, extremely ambitious, extremely powerful. And that, I believe, will push the next version of what we saw internet towards internet of commerce or internet of value. And that will power our ability to actually do trade, finance, flows, and everything else, job, employment, every other flow in a highly programmable way. It's very, very key that India gets there. India will get there. What my call to action for you is to invest. You cannot be, hiding by not seeing it. Trend is your friend. Watch the trend and invest in it. Okay, it's very, very key. Investment can be calibrated, but never miss this out. Okay, I just called out his name. He's here. The man is here. Okay, I came shamelessly use your name, by the way, everywhere, saying that how Zerodha grew from nothing because everything came together nicely, regulation and tech. Okay, thank you so much. I look forward to the chat with Rahul. We are IIME.